Hey guys, this is Grandmaster's Premium Trading, and on today's video, I'm going to be talking about how to trade like the banks, the institutions, and all those whales, all the whales that move the market, how to follow the whales to enter into a trade. Now, instead of me just talking about it, I will also be giving you guys a book that's on this PDF right here. Is a complete guide to trading, and it also talks about how the banks, institutions, the whales move, so that you too can join in on the move. And if you join in on the move, you know that you are going to be making profit. So that's what I'm going to be talking about in this video. I'll be showing you the books, what it contains, and I'm going to be giving the book the link to download the book on the description of this video, so you guys can hop over here and find out for yourself and download it, and I hope it will be useful for you to educate yourself more and to learn how to trade effectively. This is Ben Master's Premium Trading, and now I talk about how to trade effectively, types of trading, how to scale your accounts, how to basically teach how to trade effectively. Before we get into this video, note that this video is for educational purpose only. I'm not telling you to invest your money, neither am I your investment advisor. Do your own research before getting into anything. Then let's get into this video. I'm on my drive right now, and I'm loading this document. Okay, as you can see, the complete guide to trading, how to trade the market and win, and there's also a publication of Corporate Finance Institute. They are the ones that created this guide. These big guys have years and years of trading, and they trade with the whales, trade with the banks, get in the market and get it so that they can get huge profit. So my next coming videos, I think I would have like 3 or 4 videos that will just teach you other types of trading. But my next coming videos will be talking about how to get in with the whales, so that you can see me on live video, and how to really take advantage of this opportunity to move and to win, to really scale your account. Now this when you think the market can possibly go any higher or lower in bracket, it almost invariably will. And whenever you think about the market must go in one direction, 9 times out of 10 it will go the opposite direction. Be be forever skeptical of thinking that you know what the market is going to do. That's just an advice from William Gallagher. Advice from William Gallagher. Yeah. So this is their guide. CFI, that's Corporate Finance Institute, is a world-leading provider of online financial analyst training programs, courses, and whatever. So let's get into the book. Part 1, the market. And as you can see, this is a 116 pages book. This is a 116 pages book, as you can see over here. Part 1 is the markets, and under it you have understanding asset classes, types of market, fixed income market, you have the money market, the stock market, exchange traded funds, you have commodity futures, and the forex market. And all this kind of markets is why I talk about most of this in my videos. We talk about the forex. Also, we talk about not only forex but binary options. We have commodity futures, but I think that we have talked about crypto futures. Then we'll soon move to stock market and this. So we have different kinds of markets. Then part 2 is talking about trading concepts. Under that, you have random walk theory, you have fundamental analysis, fundamental and technical analysis, you have how to read stock charts, you have stock trading, value investing, you have stock trading, growth investing. Then we have part 3 right here, which is the last part. You have your technical and trading strategies, where you come up with different strategies in order to increase your accounts, different patterns, different let me say different analysis and strategies are the same but they are different. Analysis is is just like combining two or more indicators to check what the market is doing at that period of time so that you can get into a trade. But a strategy is having both your analysis, that is checking what the market will do, you have your money management, that is even if the trade goes wrong, you know whether to reduce on your money so that you don't increase in losses, or to double your funds, or to stop to step out of the market. Yeah, so you have your money management system. You have also um time trading, because you have London session, European session, and Japanese Tokyo section. That's Tokyo Japanese session. Whatever, we have 3 different sessions in trading, so you know which sessions are good for what your analysis best. Do you understand? And So all these are called strategies. Inputting your analysis, your money management, your the time, your time range in trading. Maybe you decide to trade from 1 to 4. That's where you stop. You do you understand? Just okay, I trade for 4 hours from this session to that session. Then all that things, all this together makes up a strategy, makes up a trading strategy. So they are both different. So you have analysis and you have your strategy. Your strategy is everything combined together, and you can have various strategies. Do you understand? To scale and to increase on what you're doing. So under this technical and trading strategies, we have technical analysis, just a basic guide, the ADX indicator, triangle patterns, the trend indicator, the MACD indicator, a pin bar scalping strategy, the three simplest trend following strategies, the psychology of trading winning mindset. Then you have 6 skill essential master traders, trading inspiration quotes from the masters. Okay, so part one, we have the market. And we have different kinds of markets, and as you can see, we have a long note. But in order not to talk much on this, I'm just going to talk about the three main types of markets. Then you can do your you can read this book, go through it, read it. Any question you can ask me on the comment below. I will reply your comment once I see it, in order not to make this video um long. So we'll just talk about the three main types of market quickly. Then I put the link of the download in the description of the video. Then you can go through it, ask me your questions, tell me anything that is giving you difficulty in trading. Then we can move forward from there, and so on. So let's talk about the types of market. Number one, we have dealer market, also known as over-the-counter market. And if you are familiar with trading, you know that this is called OTC. This is called OTC market, mostly done on exchanges on Saturday, Sunday, or most times after the forex market has closed, maybe by 12 a.m. or all those times. You have your OTC market. Then let's let's dive in. A dealer market operates with a dealer who acts as a counterparty for both buyers and sellers. A dealer sets bid and asks prices for the security in question, and will trade with any investor willing to accept those prices. Securities sold by the dealers are sometimes referred to as being traded over the counter, that is OTC, and these securities are your currencies. Then, by acting as a counterparty for both buyers and sellers, the dealer provides liquidity in the market at the cost of a small premium that exists in the form of bid and ask spreads. That's just a small. You have every 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 forex um let's say every forex platform has spreads, but there are some that has zero spreads, and zero spread will give you more chance of more profit. Yeah, more chance of making higher profit, because if you enter at a particular price, there will be a small gap between what you entered and what the market is currently saying. So it depends on the dealers. It depends on the dealers, and we are going to talk about these spreads in in the video I'm going to upload soon. So be subscribe, like this video, and hit on notification bell so that you would know when I upload the video, so that you can actually see brokers. I'm going to give you list of brokers with zero spreads. Then show you from the best platform to I will rank all of them, so that you can easily decide which one to hop into. Okay, let's get back. In the form of spread, in other words, dealers set bid prices slightly lower than the going market price and ask prices slightly higher than the market. Yeah, this spread between these prices is the profit the dealer makes in return for assuming the counterparty risks. Yeah, dealer markets are less common in stocks, more common in bonds and currency markets. Yeah, dealer markets are also appropriate for futures and options. Yeah, that's binary options or other standardized contract and financial derivatives. Finally, the forex or foreign exchange market is commonly operated through dealers with bank and currency exchanges acting as the intermediary connecting dealers with buyers and sellers. Of these three types of market, the dealer is usually the most liquid, because the fact that dealer existence means that there will always be an available counterparty to traders wanting to buy or sell. Now we have the broker. This broker, okay, let's get into. A broker market operates by finding a counterparty for both buyers and sellers. When dealer acts as the counterparty, the delay between broker finding the appropriate counterparty results in less liquidity for broker market as compared to dealer markets. Yeah, the dealer markets, they are the counterparty. They are the ones finding the buyer and the sellers, providing liquidity, that's money, to give to the ones that want to buy or sell. So they are not looking for anybody except the buyers, except the traders, that's the people that want to buy or sell. But the broker are finding what counterparties, different counterparties that can execute that trade. So the delay between them is results in less liquidity. So if these brokers now have to find different counterparties or find a counterparty, so they are dependent on the counterparties. Now let's go to the exchange, because I just want to talk a little brief about this. Exchanges, of the three types of market, exchange is the most highly automated. However, if no buyers and sellers are available to meet in terms of price, then no trades are executed because of the huge number of potential buyers this and sellers trading through exchanges. Such a situation is extremely unlikely and commonly only occurs in times of economy weeks. In practice, the large number of buyers and sellers make a stock exchange virtually as liquid as a dealer market. Yeah, exchanges are they don't actually provide liquidity, but they stand in the middle between buyers and sellers. Exchanges will only list the price that sellers are selling and the price that buyers are buying. So if a seller agrees to move in on the buyer's price, then a trade is done. Or if the buyer agrees to move in or execute a price that the seller has agreed to, then a trade is done. So the liquidity are only on the seller side. Do you understand? It's sellers that provide liquidity. So if there are enough sellers with reasonable price, then the buyers can move in. Or the buyers have a price that they want to buy. Then the sellers have their own price that they want to sell. But if a market is a buyer's price is low, then the seller will not sell. Then you have a limit, a open order. That's what you call limit. So you have a open order until maybe the price comes down. Then the sellers now see that the price is falling, the price of a commodity or an asset is falling, then they can easily just agree to the buyer's price or lower what they are expected to have before then a trade is executed. But the liquidity comes mostly from the sellers. Then we have exchange specified characteristics. That's we have contract or lot size. Contract is how much of a commodity asset or a currency you want to buy. Then we have contract execution slash trading months. That's you have contract execution. That's if your contract let me give an example of you want to buy an asset and you want to buy at a low price, right? Instead of at the current price, or the price is currently high, you think the price is coming down after doing your analysis, so you want to buy at the lowest price possible, but no seller wants to sell yet. So your order is open and it can be open for a long amount of time. But once that order, as maybe your analysis is correct, has been filled, that's once your order has been filled, maybe if I want to trade for my contract size about $100,000. So once that contract has been filled, that's if a seller has $20,000 and has agreed to your price, there will still be 80,000 left in your order. So the order has not been filled yet, but once it has been filled, then it will be executed. Then we have your tick size, delivery times, quality. Then we talk about a lot of all this here, so I can't go through all the video yet. I can't go through all the video yet. All this in the video. So I would leave the book. This book is 116 pages of quality time. knowing the market, the functions of the market, different bank policies, how to trade, the different patterns you need. So this book is extremely good, guys. So I'll leave the link on the description of this video. Hop on there, learn anything you have trouble um, understanding. You can actually tell me in the comment. That just type in the comment, I have trouble understanding some things, and I will come and talk to you personally. I'll come and talk to you personally. My name is Ben, Masters Premium Trading, and bye for now.